So I've been saying for a couple of months that kind of activity levels were starting to improve on the front line, measured by the amount of people we're seeing at open homes. And then the secondary measure is the number of offers getting received. Obviously, traffic through open homes is kind of like the first thing that you see as activity levels, as an activity level. It's a leading indicator, isn't it, of activity levels. The data that we see in terms of sales and properties to market, that has a lag to it, of course, prices and that sort of thing. Deals have to be done, but of course, people add open homes. That happens way before offers get made and deals are struck. So it's always interesting to keep an eye on that stuff, and we monitor that information weekly. So I was saying for the last couple of months that we were seeing improved levels of activity. Pleased to report that has finally translated into slightly better looking results, as we will see throughout here. So overall, Wellington values have stabilised over the last month. It's only 1 month. And so value's been falling generally since the election. We saw it more clearly as we got into 2 or 3 months into 2024. But generally, the market's been softening since the election. So a message for sellers is it has become a little more balanced. It's a little better than we saw earlier in the year. And buyers, look, it's still prices are still good for buyers. It's not a tough market for buyers by any stretch, but we have seen reduced stock levels, as is typically the case in the winter months. So let's get into the detail. Median sale price $790 versus $760 a year ago. So it's been a while since we've sort of consistently reported increases over the last 12 months in median sale price. As you know, I don't pay too much attention to median prices because it reflects the mix of properties being sold as well as the underlying values. Let me just let someone else in. But you can see the general pattern there. It's been broadly flat now for just over 2 years. In fact, I think what have we got the number here for July? Can we see that? No, it doesn't show up on the when I'm doing the presentation. I think there's something like $10,000 or $20,000 difference between July 2022 and August 2024. So it really has been overall pretty flat. But let's look at the Real Estate Institute House Price Index, because that's the best guide to underlying values. So there you can see, look, Wellington still has the auspicious privilege of being in the lead in terms of having dropped the furthest since the peak at just under 25% drop there. Auckland not far behind at 22.8. New Zealand quite far behind. So yeah, we're still in the lead in that front. So not fantastic. Over the last year, we have softened ever so slightly. Most places have not, but there are a few that have. As you can see there, Bay of Plenty, Gisborne, Auckland has softened more than any other region over the last year. We had recovered and then we deteriorated again, and we've gone back down below zero there. So not great over the last 12 months. Over the last 3 months, that reflects what I just said before. We were strengthening and then we've come down a bunch. And the degree to which we've dropped over the last 3 months is not as great as it was a month ago. From memory, it was more like 4% or 4.5% or something like that. And as you can see there in the 1 month result, we've recovered ever so slightly, which is reflective in that result there. So, I mean, it's hardly a good news story, but here we're getting into a bit more of the detail. As you can see there, Wellington region 1.5% down over the year, 2.3% over the 3 months, and 0.4% up in the month. And you can see there the trend in the excuse me while I get rid of that phone call. In the 3 monthly result there, which is the orange line. So we were recovering quite strongly, seeing some decent price growth, which then eroded away, and then we've been falling over a lot of this year. But you can see a reasonably clear sort of recovery there for the month of August, as the monthly result has gone from kind of 1 or 2% drop per month to a small positive in the month of August. Now, one swallow does not make a summer, but it's been fairly consistently a small negative number for a number of months now, and so that is a bit of a change in the pattern that we've seen recently, and it's consistent with the improving activity levels like I was talking about before. So that data point on its own would not be enough, but taken together with the increased activity levels, I think it is actually reflective not just of random data variation, but actually of a market that did actually get a bit better. There we are over the last year across the different areas. So Wellington City definitely not looking flash there at nearly 4% down over the last year. Upper Hutt grown a bit, but varying sort of results there. Wellington City and Lower Hutt in particular looking quite weak there. Over the last, over the last 3 months, you've seen Wellington City recover a little bit there, and that is again because of that 0.9% up in the last month of August for Wellington City. Lower Hutt not looking so great over the last 3 months. Well, there we go, Wellington City, and there's the graph for Wellington City. So as I keep saying, Wellington City, it's a smaller territorial authority than the overall region, so there does tend to be more variation in the data. It's a slightly small data set. Still a decent number, of course, but we tend to get slightly higher highs, slightly lower lows, and this is no exception. So whilst the region recovered to I think it was a 0.4% improvement. Yes, 0.4% improvement over August. Wellington City, 0.9% improvement. However, it also fell further when the market was weak earlier in the year and values were pulling back. Yeah, so that's the overall picture on the values side of things, the house price index. So broadly speaking, it's been weak throughout most of 2024. August has seen a bit of a recovery. So let's hope that continues. New supply coming to the market, 477 in August versus 461 a year ago, 510 2 years ago. So ever so slightly more than we saw a year ago and a little bit less than we saw 2 years ago. So this is a little different because typically the story has been we've been seeing way more supply coming on than a year ago. Now, obviously, as time goes on, the base that we're comparing it with changes. And as in August last year, we were seeing pretty anemic stock levels. So the fact that we're only 3% over that, it doesn't indicate a large amount of supply. Sorry, the fact that we've been seeing typically much bigger than 3% increases. And so that shows that, yes, we have seen a pullback in the amount of supply coming to the market. Now, that will at least partly be due to the fact that vendors have seen that once again, since the election, the market's gotten tough. And so they've decided, look, it holds vendors back if they don't have to sell. And if we look at this here, we can, and of course, it's typically lower listings in winter. But here we go. So new listings coming to the market lower than we normally expect in August. And this is the change that we've seen this month. Typically, we've been seeing large amounts of listings come to the market. And in August, you can see there fewer than average for August. So typically, if we go back the last few months, I've been consistently saying more listings than is normal, big increase in listings. And indeed, you can see that until we've entered into winter, you're seeing really quite large listing volumes here. Even if you look back here, I mean, it's not completely out of whack, is it? But they're up there compared to the peaks that we normally see. And you can see there the trend. The red line there shows these massive increases in listing volumes coming to the market. And over the last couple of months, we've seen that 6-month total, or 6-month average pull back a bit. And that, of course, is what you want if you are selling. You want less on the market to compete with. So that's indeed what we've seen over the last couple of months. And again, that has been what's driven a decent chunk of it anyway. That will be what's behind the improving conditions for sellers in the market out there, a reduction in the amount of supply coming to market. Because if you think about it, a buyer that's in the market, they don't care about the hundreds of listings that are already on TradeMe or whatever website they're looking at. What they're really interested in is the new ones that are coming on this week that might suit me. When it goes from 10 a week that might suit me to 3 a week that might suit me, or 5 a week, that changes the sentiment of buyers too. So it does create quite a different dynamic when the supply, the new supply coming on changes significantly like this. And then you can see it in another format, so that's quite dramatic again. We were seeing really significant increases in the amount of supply coming on every month when compared to the same period 12 months prior. And in August, that's changed. So we're only just ahead of what we were doing last August versus 50, 30, 60, 70, 100% more than the same period 12 months ago. So again, that is a good part of what's driving the changing market sentiment out there in the last couple of months. What about number of sales? So we were just talking about the amount of supply. This is a proxy for the amount of demand. It's not perfect by any stretch. But you can see there, whereas we were seeing absolutely massive increases in the new supply coming to market, we've only been seeing gentle increases in the number of deals getting done. So despite swelling amounts of supply, we were not seeing commensurate increases in the amount of deals getting done. So 562 sales in August this month, or just last month, versus 533 a year ago. And again, that's a bit of a change in situation. We saw more sales taking place than a year ago. Whereas if you remember, go back to the supply side, we saw fewer or very similar numbers of properties coming to market. So more sales taking place than a year ago is a little bit of a change in situation. Now you can see there that number of sales taking place is actually coming down from the previous month, but that's more of a seasonal thing than a reflection of the market sentiment, I would suggest. And hello, what's wrong here? Still below average for August. Yes, that's true. Right, so more than a year ago, but we're still not up to what we would typically see for the month of August. And there is another format. So we were seeing, typically, as I was saying, we were seeing more sales taking place, not more like 60, 80, 100% more like we were seeing listings coming on, more nonetheless. And in August, again, we're seeing a little bit more, not massively more. 562 versus 533 a year ago, 525 2 years ago. So look, it's a bit more than we were seeing both 1 and 2 years ago for the month of August. How long is it taking to sell? So this is interesting because this does not point to an improving market. This points to a deteriorating market, which is a bit of a contradiction to some of the other data points we're seeing. So 50 days to sell in August versus 38 and 59 1 and 2 years ago, respectively. But again, you look at the shape of the graph there, that's probably more instructive than anything. And then on average, 36 days, so significantly longer than average. And indeed, over the last 12 months, we have seen, according to this measure, conditions deteriorate. It's generally been taking longer to sell. As I was saying, overall, my assessment is that the market has been getting less tough for sellers, and in August we saw that starting to come through in the actual price data. The other indicators I'm suggesting have been indicating that it's been getting less tough. This is one measure which does not suggest that. This is saying it's becoming more tough. Interestingly, we also track the data that's on average across the Wellington region with what we do at Low & Co. And the most recent data for our duration to sell is actually 31 days. I looked at it today. We have consistently been tracking significantly below the average in terms of duration to sell. So that's encouraging. But this is the Wellington region overall, of course, not just our data. The amount of inventory, again, you can see the trend there, a consistent increasing trend in the amount of inventory coming to market. But in August, a significant drop back from what we saw in July. In July, I think it was 17 weeks. In August, 14 weeks. So 15 is the long-term average. and we were back down to 14 weeks, which was reasonably typical for what we've seen since about this time last year. But as we were going throughout 2024, it did bump up a bit there, as you can see, for the last few months, but reassuringly, it's come back down to 14 in in August. There you can see there's the long-term average, and this is the average over the last 9 years or so. So I often sort of think it seems odd that the market we're in now, according to this metric at least, at 14 weeks worth of supply is pretty typical compared to the long-term average. It doesn't feel like a typical market. It feels like a tough market. But when you compare it to what we've seen on average over the last 9 or 10 years, which is roughly just under 10 weeks worth of supply, that helps explain why it feels a lot tougher, because what we've been used to dealing with in recent time, or more recent times, is more like 10 weeks worth of supply, not the long-term average of 15. Number of TradeMe listings, again, you can see the trend here, as is typically the case. As we enter winter, the number of listings come down. I would now suggest that we will now see TradeMe listings overall start to increase, unless for some reason there's an anemic flow of listings coming onto the market. If for some reason vendors go on strike again. But typically what would happen as we're coming now into spring, we would see the listing volumes increase significantly from October onwards. But there's the numbers: 2534 as of a couple of days ago, 1843 a year ago, 2526 2 years ago. So pretty much exactly the level we were at 2 years ago, and significantly up on 12 months ago. But over the last 6 months, as you would expect, seasonally, a significant reduction. And there it is in the other form, comparing to 12 months ago. So we're still seeing significantly more listings on the market versus 12 months ago. The degree to which it's more has just turned around, though. As you can see, it's gone from accelerating to decelerating, from increasing to decreasing. So still more, but more to a lesser degree than we saw last month. So I've got some more slides here for you. So my question here is, and this is where I would be interested to hear your feedback. So anyone would like to pipe up, that'd be great. My question to you is this: is winter a good time or a bad time to sell property? If someone can jump in and just tell me your opinion, what's your view? Is winter a good time or a bad time to sell property?
Usually you'd have less competition because there's less properties on the market.
This will be the end of the presentation if no one says anything. Okay, who's saying that? Okay, Kerry's saying it's a good time. Kerry, please be brave and tell us why. Any idea why is a good time? Most people wait until spring and summer. Okay. Anybody agree? Anybody disagree? What are the thoughts out there? Maybe even just bang in a message there. I agree, fewer competitors. Monica, Peter, there are less properties on the market. Correct. Yes, there are fewer competitors. Depends on the type of property. Okay, that's interesting. Okay, good. Look, that's very interesting feedback, guys, because when we're talking to people, I mean, obviously, I and my colleagues, we're talking to potential vendors all the time, and the vast majority of people will say, oh, we know that winter's a bad time to sell. And it's a real misconception. And people think it's a bad time to sell property generally because the weather's bad, it looks gloomy, there's a little less activity out there because people don't want to go open homing and all that sort of thing. But the reality is that if someone's having a baby or life is moving on, they're having those big milestones, people don't buy and sell property for fun. People don't look for property for fun. They do it because they need a bigger property, or they have a change in situation. Oh, what's going on with my buttons here? And so in actual fact, because people think that winter is a bad time to sell, they don't put their property on the market, then there is less competition, as you've all so correctly said, and that makes it a better time to sell in many respects. And here is a perfect example. So this just shows Low & Co open home traffic. This is the average number of groups attending an open home. Now, the gross quantum here is not what's important. It's the trend that's important. The red line shows the average number of attendees at an open home across all listings, no matter whether it's week number 1 or week number 15. Now, the bottom part of the graph shows the number of open homes. Number of open homes during the month. So when we have a lot of open homes, we have fewer attendees at the open homes. Now, this is just so logical. It's almost absurd or embarrassing to think that people could think differently. But when we've got a ton of property on the market in spring, when everyone knows that it's a good time to sell, the amount of activity at each listing is relatively lower. We're down here lower. And then as the number of open homes decreases, because everyone knows that winter is a bad time to sell, each listing gets more activity. It's simple supply and demand. Well, I suppose it's not. It's actually just simple demand, supply. Because this is just showing the amount of supply on the market. What we don't know is the amount of demand. But as I sort of indicated before, my sense is that yes, there is more activity in spring and summer, but it's more by a marginal amount, whereas the amount of listings coming to the market is way lower in winter than it is in summertime, as these open home volumes suggest. So clearly you can see the trend there. We've gotten almost a doubling of the amount of activity at each open home over a period of 4 months here as we enter winter. Obviously, if you're selling your property, you would rather have an average of 6.3 groups at your open home compared to 3.5. And the same is true when we look at the number of offers that each listing is attracting. At the bottom here, we've got the number of listings, and at the top here, we've got the number of offers. And so obviously you can see here, look, at 3.5 offers per listing, that is great. That's 3.5 buyers trying to buy each property. When you're down here at 0.78, and remember, this is not just on tender day, this is the number of offers throughout the entire lifetime of the listing, from when it comes on to when it goes off. So 0.78 over a period of what could be 3 weeks, it could be 3 months, that is low. 3.5, that is very good. Over the last 6 months, you can see it is not a steep increase, but it is a consistent. That is definitely a trend. That is not a one data point improvement. As the number of listings reduces, so the number of offers per property increases. So yeah, you guys were on the money. Winter is overall, each listing gets more attention in the winter months than elsewhere. And TradeMe data shows that also. Each listing attracts more viewings in the winter months than other times of the year. I'll just catch up on your questions here or comments. Zoe, do seasons generally matter in terms of time to sell in this current economic climate anyway? Well, Chloe, would you rather have an average of 2.2 offers per property or an average of 1.5? So that, I mean, most people would say that the economic climate has been fairly consistent over the last 6 or 8 months. More activity has to be better than less. So I would suggest that, yes, these things still make a difference. However, if someone asks me, well, when's the best time to sell? My first response is always when it suits you. Don't try and time the market based on the seasons or the peaks and the troughs, and you should drive it based on your life circumstances, on the life events, which is what most people do. It's just too hard. And as we saw last year, conditions were quite good as we went through 2023. Vendors all started thinking, I will bring my property onto the market after all, because a whole lot of vendors had gone on strike, had postponed their plans, but life had moved on, so they can't postpone them forever. They saw the good results coming through, or better results coming through. They just thought, I will sell after all, but I'm just going to wait for the election. It's never good doing this before the election. So we continued getting good results, improving results up to the election. Then everyone decided to sell their property or bring their property to the market in the months after the election. And as a result, things got a whole lot tougher. And as a result, we saw prices, values pull back by another 5 or 6% as the horde came to the market. So don't try and pick your timing. It's too hard, is what I would suggest, Zoe. I mean, if your house is in a crevice and you get no sun, that's really obvious in winter. That's a bad property to sell in wintertime. But if your property gets reasonable sun and all the rest of it, it's perfectly fine. Peter, I think it's good as a buyer to see the worst side of the property. Yes. Yeah. Well, that's true. Yeah, again, so if your property has issues, then when the weather is poor, then those issues might become more obvious. But if it doesn't, then the seasonality is way less relevant. Kerry, a general question: how long would you say it's safe to be out of the market if you sell first? Okay, that's interesting. So you have the money ready to go if you had somewhere to stay in the meantime. Well, at the moment, prices are not under pressure upwards. At the moment, I would say you're fairly safe. These things can change at any time, of course. And generally, Kerry, I would suggest that, yes, selling first is usually better because then, as you say, you know how much money you've got. And then once you've got the cash in your hand and you are, you're absolutely a cashed up buyer, you know exactly how much you can pay, then you can make good, strong offers. And there's a bunch of buyers out there who cannot. So you're in a very good position to be able to, negotiate and make good cash offers and get attention above everybody else. So how long? Obviously, the longer you wait, the more risk there is. And I certainly wouldn't wait in the expectation for prices to come down further. Could they come down further? Yes. Is it likely that they're going to come down further materially? In my opinion, no. I wouldn't wait for that. So I would just use these opportunities, these sort of better market conditions for buyers to get a property that meets more of your criteria with less competition from other buyers than you would otherwise have to deal with in many other market conditions. Hey, hopefully that's useful stuff, guys, and interesting questions. I appreciate you sharing those thoughts. Okay, good. So hopefully there we go. That's not just some real estate agent spouting some hot air. That's actual empirical evidence that there has been, and we often find this is the case, more activity in the winter months, which completely flies in the face of what most people know to be true, which is that winter is a bad time to sell. All right, so in summary, folks, Wellington values have stabilized in August. New listings have been level with same time a year and 2 years ago, but seasonally low, as in wintertime. Sales volumes have been up slightly, but still below August norms. Duration to sell has been long and rising recently, and I find that data point to contradict much of the other what we see going on, which is that the market has been getting less tough. That data point shows it or suggests it's been getting more tough. Inventory is up versus a year ago, but down versus last month. TradeMe listings are up again versus a year ago, but seasonally down over the last several months as we've come into winter. So as I've suggested for sellers, market has stabilized in the last couple of months. It's better than earlier in 2024, not because prices are higher, but there's a bit more liquidity. The risk of not achieving a result has reduced. Message to buyers is that stock levels have been reducing in recent months. Prices haven't been running away though. And as usual, thanks to Real Estate Institute and realestate.co. And I have seen there are more another message here somewhere. Here we go. Oh yeah, no. Are you seeing, Fred, are you seeing property investors still trying to sell, or are people seeing the light again as interest? Yes, good question. So Fred, that's a good one. We are seeing property investors trying to sell more than 6 months ago, 12 months ago. I think there's a couple of things going on. One is that they've gotten their tax return and it's ugly. They're generally under pressure, and they're hoping that the tax deductibility being reinstated will bring more investors out of the woodwork. Unfortunately, we're not seeing a real swell in the amount of investor activity on the part of buyers. They are starting to stir, though. So what I mean by that is, and I see feedback from the likes of the Tony Alexander surveys with mortgage brokers. Mortgage brokers are all saying they're getting more inquiries, more applications from investors. And I am definitely seeing more investors out looking. We're not seeing a real increase in lots of offers getting made by investors yet. So I would call it early stages in activity levels increasing on the part of investors buying. But definitely there are more investors trying to sell. So as a result, pure investment properties, by which I mean 3 flat properties in Mount Cook or Newtown or these sorts of things, those continue to be quite hard to sell, and you have to sell at pretty high yields in order to achieve a result. Generally, I can only speak in general terms, of course. My advice, and I've been selling a lot of investor stock this year, and always my recommendation to my clients is find something that we can sell as a first home, as opposed to 3 flats on 1 title or that sort of thing. There have been exceptions to the rule. And I've had some very interesting properties. One we've got on at the moment, I just came to market yesterday, fantastic property in Lower Bay, which has got 4 apartments on the back and a family bungalow on the front, all on over 1,000 square meters of flat land. These are fantastic properties. These are, real opportunities for investors with lots of upside and that sort of thing, a potential small development, that sort of thing. But for the most part, trying to or recommending that investors sell properties that can be marketed to first homes for sure. So it's a good question. Thanks, Fred. And that was probably a longer answer than you expected, but hopefully that's useful. Alrighty, folks, we'll call it a night. That's interesting times, and thanks for checking in. If you want individualized advice, of course, you know how to get me. Happy to talk. Otherwise, go out there. Good luck, and yep, see you next month. Cheers.